recommending that people buy stocks today or tomorrow or next week or next month, but you shouldn't buy stocks unless you expect to hold them for a very extended period and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote. You don't need to pay attention to them, and you're not going to pick the bottom and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, to have it go down 50% or more and be comfortable with it. There have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. 3 different times. Now, if you owed it on borrowed money, you could have been cleaned out. There wasn't anything wrong with Berkshire when those 3 times occurred, but if you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, how can you stay with that when something else is going up? You've got to be in the right psychological position. And frankly, some people can handle psychology. If you can't handle it psychologically, then you really shouldn't own stocks because you're going to buy and sell them at the wrong time.
The beauty of stocks is they do sell at silly prices from time to time. Ben Graham writes about it in Chapter 8 of The Intelligent Investor. Well, Chapters 8 and Chapters 20 are really all you need to do to get rich.